Hello and good evening. I'm Karunya Rao, and with me in the studios is Kayezad Adajania, and we are here to decode personal income taxes and budget 2023's impact on your personal finances. Kayezad, lots to talk about today. A lot of interesting points raised by the finance minister in the budget. And of course, 3 years after the new IT regime was announced back in 2020, the finance minister has finally made the much needed revisions, the much needed changes to this new IT regime to make it more popular, more acceptable, more robust as well. So definitely there's a lot of interest there.
A lot of interest and too many changes,
yeah.
1 year before, we go into elections. Yeah. But this was a big ask by many taxpayers that, and experts also, that, the new tax regime hasn't, possibly picked up as much as it ought to have. And Homi can basically throw more light on that.
Oh, yes. Let's introduce our guests then. We have Homi Mistry joining us from Deloitte, Mr. D.P. Singh of SBI Mutual Fund. Radhika Gupta of Edelweiss is also with us via Zoom. So great, guys. Thank you so much, and a very good evening to all of you.
Good evening.
Good evening.
Homi, I want to start with you first. I mean, overall, when you look at the announcements made, the tinkering that has been done in a lot of domains, what do you make of the budget overall from a personal finance, from an Aam Aadmi standpoint?
Yeah, I think the main focus of the finance minister this time is that in the past there has been some kind of discussion and criticism that when the new regime had been introduced about 3 years back, it had not really taken off in the last 2-3 years. So she has made some important changes to the new regime. For example, she has increased the slabs. Not only has she increased the slabs, the amounts of tax, the rates of tax also have come down. And she has also now brought in the standard deduction for the new tax regime, which was not there earlier. She has also said that I will reduce the tax rate for people earning over 5 crores and who opt for under the new tax regime. So their taxes also would come down from 42.74% to 39%, So there have been some important changes. In addition to that, she has now also increased the exemption for leave encashment. And that's to be notified by the government from an amount of 3 lakhs for the non-government sector to 25 lakhs. So there have been some important changes, and there have been changes in the right direction. And the whole idea is that more and more people now should start adopting the new tax regime. In fact, she mentioned in her speech also that it will be the default tax regime.
Yeah.
So which is what I wanted to ask you, Hobi, going a little bit deeper. So what is the big implication when the finance minister says that, the new tax regime will be the default tax regime? Because most of us, when we file our returns, we have to choose our IT form. And by default, it was an old tax regime unless and until we notify our employer that we are going for a new tax regime.
Right.
So can you explain in layman's term how this change of default regime is going to impact the individual, and what should they do about it going forward? How should they, choose?
Right. So again, it would depend on case to case. As I said, if a person is earning a substantial amount of money, let's say over 5 crores, obviously they will have a substantial saving because the tax rate would come down from 42.74 to 39% if they go under the new tax regime, which makes sense for them.
The highest tax slab actually goes away.
Yes, correct.
Down to what was earlier the second last slab, now that becomes the highest slab.
Correct. So basically it'll become 39%. So there'll be substantial savings for them. Also for people who don't have substantial exemptions or deductions that they were claiming, this new tax regime should also benefit them. She had also mentioned that now people who go under the new tax regime, the tax, they would not have to pay any tax up to an amount of rupees 7 lakhs because they'll claim a higher rebate, etc. And if you claim the standard deduction of 50,000 rupees for salaried employees, if their income is 7.5 lakhs also, and then they claim the standard deduction of 50,000, even there they would not be liable to pay any tax. So, in a nutshell, people who are at the lower end, who don't have a very substantial income, or who are claiming lower exemptions or deductions, or have got very high income, would definitely benefit. Of course, you can go under the old regime. There is no bar under that. That continues.
But now you have to specifically choose the old regime. Otherwise, if you stay quiet, then it's like your new tax regime is assumed.
Right. So you'll have to opt for that. We'll have to wait for the modalities. What is the procedure? What kind of declarations or forms might come out for that? But there will be people, kayezad, who will also continue under the old regime. People who have been claiming deductions or exemptions, let's say for housing allowance or for leave travel allowance. You've been claiming deductions, let's say under ATC for payments made for life insurance or public provident fund. You're claiming deductions for NPS, etc., maybe for medical premiums, even for donations, deductions, etc. People who have been claiming big amounts might continue under the old regime.
You know, I was reading the finance. I was not only hearing but reading the commentary later. But you know, she said that individuals with the income of up to 7 lakhs will not have to pay any tax under the new regime, and they will be eligible for a rebate under Section 87A. That's currently available to individuals with an income of 5 lakh rupees. Now, just for the benefit of our viewers, if you could clarify what exactly does it mean to get a rebate vis-a-vis some kind of an exemption?
Right. So what will happen, there is a tax on the amount, let's say up to 7 lakhs, there is a tax. But that tax, in reality, there is no tax because the government says now if you go under the new regime, up to 7 lakh rupees, whatever is the tax on that, that entire amount will be sort of reduced from your tax. So you get a full rebate of 100% of the tax up to 7 lakhs. So in reality, you're not paying any tax.
So that is only for people whose income is up to 7 lakh.
Up to 7 lakhs.
If there is more than 7 lakh of income, then the rebate doesn't work, right?
Yeah, then the rebate will obviously not kick in. Yeah.
Okay, Ms. Singh, I want to understand, I mean, not only from a personal standpoint, but also from a market standpoint. I mean, what did you think of, you know, the budget this time?
I think there has been an attempt to not only take care of the financial part, but the behavioral part. And the behavioral part is they want more and more people to come into the new regime. And see, old regime is going to be redundant. In any case, if they don't do anything, after 1 or 2 years, as Mr. said, some people will still do that. But over a period of time, it will get redundant. And today, the benefit of old regime and this is getting reduced day by day.
Do you ever see us reaching a point where the old regime will be eliminated totally?
Of course. I see a matter of maximum 3 years.
Okay.
Then it will be. But today, when we say that the old regime, new regime will be the default regime, then it's kind of getting a negative. By default, you are into new regime. You have to specifically say that you want to be into the old regime. So see, people at the highest level also, the difference is hardly anything. And it's so simple in the new regime that you don't have to take care of so many things, because the universe of deduction is also coming down day by day. Because when you talk about 150,000, which has been there for years and years, so the universe has come so low, except for a few people who are entering the new job markets now because of the provident funds and the HRAs and interest on the deposits and the tuition fees, so on and so forth. So when you don't have to do anything, actually it's happening automatically. But the benefit is so small. So most of the people will go into the new regime. And the second attempt has been with the, if you look at the number of income tax returns which are filed, almost 30% of the total returns are filed at the lowest level, where people are not paying any tax. Below the, today if they were filing below 5 lakhs, now they will start filing below 7 lakhs. So that 2 lakhs extra multiplied with the total number of such returns will get into the formal economy. And you add to the formal, the multiplier impact of that. I think 20 to 30 lakh crores of the money will come into the formal economy from cash economy, which we can't shy away with. This exists, though it has come down, but still exists. So that will be a big benefit for the whole investment ecosystem.
Okay. I would like to welcome Radhika Gupta also.
Hi, Kayezad.
Hi, Radhika. Welcome to Money Control. Just wanted to bring you in and seek your opinion on, one big miss from the budget and one big ask, by a section of the mutual funds industry and even financial planners and experts in capital markets was the capital gains tax. Different in financial investments have different thresholds to determine whether they're long-term or whether they are short-term. So, what's your reading of it? I mean, before every budget, this debate comes up that, capital gains tax has to be standardized, streamlined. But even this year also, we didn't hear the finance minister saying anything on that.
So I think this is a two-sided coin, to be honest, Kayezad. There is one side that is, fairly saying that, there are too many tax rates out there. Equity is different, debt is different, real estate is different, you need to standardize it, and all that is well and good. The brighter side of it, however, is I have personally been a big advocate of tax consistency. And too much change is also not good. So, it's been some time since we've had this 10% LTCG in equities, a few years, and it continues. At least there is a recognition, because the worst that could have happened, I'm an optimist. The worst that could have happened is, you made equity taxation sort of worse, not 3 years, but tinkered with the rates, etc. At least you're realizing that equity investors are important in nation building. Domestic capital is important. So while a change is sometimes desirous, I think stability of tax regime has its own pros, and there are already a lot of changes going on personal slabs. I would say, though, from a mutual fund point of view, the mutual fund industry has reason to cheer, because some of the tax arbitrages, have been closed. For instance, in insurance industry above 5 lakhs in certain products, taxation rules have changed. Market-linked debentures have changed. So real estate has changed. So there are material changes in competing products that I think should make the mutual fund industry very happy.
Okay.
I just want to shift gears a little, since you've asked about, the taxation part. Radhika, I want to also understand from a market standpoint, are you happy with the slew of announcements made? Because clearly the push has been towards growth, towards firing up private investment, towards, attaining the long-term targets of the government that they've set for the next few years. So do you think it's the move in the right direction?
I think unequivocally yes, and two reasons I would say. One is that the equity market wants to see growth. Over the last 3-4 years, you've embarked on a path of growth, capital expenditure expansion, which you saw in this budget. So you have ticked the boxes of growth, capex, and infrastructure, while keeping the bond market. I haven't seen my bond CIO as bullish as he was today in quite a while. So while maintaining your sense of fiscal prudence and committing to that, and you've done whatever you could on consumption by putting more money in people's hands to consume and invest. So I think, one, you've checked that box without saying too much. You've actually done quite a bit. Second, which is an overarching point I would like to make, is you have established that we are a little more long-term in thinking, which is very important to the market. The market looks for stability. The market looks for long-term. You haven't gone into the temptation of being populist 1 year before an election. You've provided a consistency of tax regime, and sort of the vision you've laid out for over the last 2-3 years, is continuation. So what I like is that this is not a dramatic budget. Budgets are not becoming dramatic. There's a larger vision, and it's a constant execution and enhancement towards that vision. So I don't think the market has any reason to be unhappy. There were no negative surprises. You continue down the path that you were committed to, which is a path of growth. And India is coming off, a tough decade, as the economic survey highlighted, and potentially sort of going to lead the world in growth. So I don't think the market has any reason to be unhappy. I don't look at today's market move as a determinant of whether it was a good or bad budget, by the way.
So, Homi, coming back to the old tax regime versus the new tax regime. Now, realistically speaking, Mr. D.P. Singh gave his views about where he sees the old tax regime going practically. But what are your views about it? And I'm asking specifically in context to two of the most popular deductions which people in the old tax regime have taken over years. Section 80C, mutual funds are also a part of Section 80C, and then Section 80D. Now, before the budget, there were a lot of expectations that to make the new income tax regime more popular, they might introduce Section 80C or Section 80D in the new income tax regime. But practically it was not going to happen, but still there was an expectation. So, these are the popular deductions. Many people go for them. I don't think that, I don't know what you feel, but realistically speaking, do you see these deductions surviving in the future with the old tax regime, or you think we are going to a stage where even these most popular deductions are also going to go as well as the old income tax regime?
What I feel, Kayezad, is that yes, definitely the focus of the government is to go under the new tax regime. But I think the government might continue with this, giving the option to go under the old regime, because people are claiming also under 80C, the other important section that people also claim a deduction, and a lot of people claim it, is when they pay interest on these housing loans up to 2 lakhs. So that's also an important deduction in addition to insurance premium or to interest on savings account. That's a smaller amount, So I think I'm expecting that the government will continue with the old regime, and plus you can claim standard deduction, etc.
But they'll continue to make the new regime even more and more.
They may make it more attractive. That's possible. They may make it more attractive.
You still have 5 tax slabs that have come down
under the new tax.
From
From 6 it's come down, yes.
Yeah.
But they've slightly expanded the slabs. The amounts have been expanded by 3 lakh rupees. It's 3 instead of 2.5. It's like 3 lakh rupees each.
Okay.
So these tax deductions, exemptions, do you foresee that they will be eventually introduced to the new tax regime to make it more attractive? Could that also be a possible step?
It's possible, because if you see in this budget, they've extended the standard deduction for salaried people, which is 50,000 rupees, plus an announcement has also been made for this family pension deduction, which is 15,000 rupees. So it's possible in the future there could be some more deductions or exemptions available, which are under the old regime, which may go to the new regime.
So the standard deduction for the new regime, just to make it clear, how much is it? 50,000 or 52,000?
No, it's 50,000. The standard deduction that one can claim is 50,000.
Okay.
50,000.
Okay.
Under the old and under the new regime for salaried employees.
For salaried employees. Yeah. Okay. So practically, when this would have an implication even on how you plan your taxes from now on, as in, because for salaried employees, when they have to start planning their taxes earlier in the financial year or even during Jan, Feb, how you plan your taxes would also now change. Your approach will change, because since the new tax regime has been made more attractive, you will have to now figure out whether you will invest in, let's say, an ELSS fund, or whether you need an insurance policy.
That could also be a factor. Tax could also drive that, But again, it depends, as I said, Kayezad, from case to case. Some people may say, irrespective of tax, they may want to continue with the existing investments. For example, let's take public provident fund. Okay, the deduction is capped along with the number of investments and expenditure up to 1.5 lakhs. But it's an avenue which gives you a good rate of return, 7.1%, and your money is also secure. So some people, irrespective of that, may want to continue. And that could be there for other investments also. For example, you've got insurance policies on health. You may not want to discontinue something like that.
Obviously.
So those factors also have to be borne in mind. There could be people investing in this NPS who may be wanting a good return in their retired life. That also you get deduction up to 50,000. So some of these investments will still continue, maybe irrespective of whether one gets a benefit or not.
Because your tax planning is always a subset of your overall financial planning.
Correct. That is absolutely correct. Yeah.
Mr. Singh, what do you think? I mean, of course, your ELSS schemes in the overall scheme of mutual fund industry is a small percentage. But I just thought of asking you, what is the future of ELSS schemes when the whole tax regime is shifting towards the new?
There are 2 parts of it. One is ELSS, people who are investing, as Mr. is also saying, that the people are putting money not only for the tax purposes but otherwise also. Because there is a segment who wants to put in money and they want to fire and forget kind of thing. They want to lock in for 3 years. If I take care of my own ELSS, it's not very small, it's around 12,000 crore fund. Okay, it's not, we are around 9%, 10% of the market share in that category. But still, when we look at the ticket size, there are ticket sizes much more than 150,000. People are investing money and intermediaries are also pushing those funds. If it's a good performing fund, they would like to push it for 3-year lock-in for 2 reasons. One, discipline for the investor, and second, See, the continuous say income for the distributor, the intermediary, both work together. If you look at the largest of the ELSS and you look at the data, the people who are investing without claiming the tax rebate is much more than the people who are claiming the tax rebate.
But do you get investments more than 1.5 lakh?
Of course,
in ELSS?
we do.
In ELSS.
The number of such transactions are more than the number of transactions below 1,50,000. So ELSS is a category. Okay, so that's one category where we continue to get fund. But of course, the newer people who are just joining the bandwagon, this is very, very good way for them for investing in a disciplined way. So when we are talking to them, we always say whenever you are in a habit of buying the depreciating assets, why not to balance it with the appreciating assets? So depreciation, appreciating efforts. So we are pushing that as a marketing tool also. So this is a good scope. For everything, there is a big niche. And there are a number of investors which are good enough to put money in these funds.
Okay.
Do you also see investment in gold also go up, especially electronic gold, because that also there was an announcement with respect to that where the conversion of physical gold to EGRs will not be there won't be a capital gains tax.
Yeah, I think that's an important announcement. People have not taken notice of that. So going forward, more and more people will put in money into the electronic format, and now in the younger generation especially, there's no craze of jewelry or there's no craze of keeping so much gold at home. So as a hedge against other investments, people will definitely go into the electronic mode. It could be either through ETFs or there are other forms also available. So I think that will definitely grow from here on.
Radhika, one of a couple of asks from AMFI, from the mutual funds industry, from the budget, was also something around debt passive funds. I know you've been a big proponent of debt passive funds, and also funds investing in fund of funds that invest in equity ETFs. So the finance minister again has been silent on both those asks. By the mutual funds industry. What's your reading on it? I mean, debt passive funds obviously is not, it's a virtually new area of investment. But, do you think with more tax incentives, the segment can become more and more popular with the retail investors?
So I think debt as a segment and fixed income passives need to become more popular as a consumer product because, in an environment with the most popular competing product, that is FDs are fully taxable, tax-free bonds are in limited supply. I genuinely think they are a good consumer product. And 3-4 years into this, they're the oldest in the game, people have had a good experience. Now, it's unfortunate that we haven't got what we want in terms of announcements. But I think, one of the asks was, of course, DLSS or debt-linked savings scheme. In light of the fact that a lot of action is going to move into the new regime, perhaps that ask may be a less relevant ask. So tax swaps are always welcome, but net, Kayezad, I would say two things. One, the debt mutual fund industry, by virtue of having this 20% with indexation structure, already actually has a very good tax structure compared to competing FDs. I think we just have to speak more. Secondly, I think, just to repeat the point I made, we did compete with products like market-linked debentures, insurance to some part, and at least we are at parity from a taxation point of view, if not better. So, while we've not got everything that we've asked for, I think the status quo is also not bad and the asset class still continues to grow.
Right. Homi, one question I wanted to ask you. Any big misses from the budget that you wished you could have seen today as far as the individual taxpayer is concerned?
So I think one of the things was pertaining to the capital market, that there was an expectation and there was discussion that the government would try and reduce the holding period for various types of capital assets and maybe even try and restructure the tax rates and make it simple. So that's not there in this budget,
So that is something that we'll have to see if it gets corrected in the next budget or so.
Yeah.
The next is also a vote of account, as we were discussing earlier.
Yes.
Okay. Anyways, thank you, Homi, for joining, and we are very glad that you could join us for this discussion.
Thank you. Thank you.
I want to get in your perspective on the market as well, just to understand, because yes, I mean, intraday also we saw a fair amount of volatility come by, but the markets or investing is not about day-to-day movement of the market. But overall, do you think the finance minister, the government has done enough to spur growth, to really uplift the sentiment? Because we've seen a lot of gloom and doom in the last 1 year, a lot of turbulence. There were highs as well, but there were lows as well. So talk to us about what do you think from a market standpoint, how would you rate it?
No, I'll rate it very, very high. Actually, if we look at the intraday, as you rightly said, we can't read too much into it. And we know there are so many other reasons. And the market is down because of one particular share, and there has been reasons for that to happen. And these are something to worry about. But overall, whatever government could do, they have done. If you really look at the same point which I was talking earlier, to look at how much money is coming into the market, so it's going to be almost 30-40 lakh crores which will be coming into the investments and the other consumption, which is a big. When you are talking about 5 trillion economy, and out of that, by just one step, you are getting almost 2.2 to 0.3 trillion by just one go. It's a big thing, right? And then most of the money finding way into savings, because we are, as a country, we are worried about the savings rate coming down also. And with these more and more money coming into the formal market, I think saving rate will also get pushed. The savings and investment are bracketed in any case, right? Some money comes into savings, some money, because even banks need more deposit. Banks need more deposit to take care of the credit growth, which is very, very robust as of now. So overall, from banking point of view, from mutual fund industry point of view, from capital market point of view, everything is good. As far as markets levels are concerned, those are different ballgame. Valuations are also very, very important. We know that valuations are stretched. So it's not that, but one thing is there, the global money doesn't have any other alternative but to come to India. That's very clear. It comes today, it comes tomorrow. Or whether we bring in more businesses, more companies getting into this capital, more NFOs coming, more IPOs coming. We are used to using NFO, it's IPOs. So more IPOs coming, I think we are into good times. Very, very happy about overall whatever has happened today.
But you're not particularly concerned about valuations being high, which has repeatedly been flagged by several people when it comes to Indian markets vis-a-vis other EMs.
No, see, when you talk about the valuations of the market and valuations of stocks are two different things.
Yeah.
And today, even if the valuations of the market are stretched, there are very, very good opportunities. If you look at what happened during the last 3-4 days, some of the stocks have become really, really attractive. So through the vehicle of mutual funds, I think if retail investors put in money, the mutual funds will be able to create alpha for the people, for sure. I'm very much sure that the active funds will definitely create much more value for the investors over the long period. Whatever the levels are, the opportunities are always there. And we are not only into equities, we are into debt also. And as Radhika ma'am rightly said, the status quo itself is very good for strengthening the debt products. Even today, when we look at the overall debt AUM, 80% is coming, 80-85% is coming from either corporates or the ultra HNIs and HNIs. We need to retailize that. We need to educate people. The tax efficiency is huge. Only thing is the responsibility is on the industry and the financial education. For you and me put together, I think we can take this to the next level.
Simplified products also.
No, products are simplified. The education becomes technical. The people who are into the business, they need to be educated to educate the investors, because all said and done, capital markets are mostly intermediated markets. These are not something people are coming on their own. If they are coming on their own, they are making more mistakes than making money for themselves. Right. So that's something. This is a responsibility of media and the companies like ours to educate more and more intermediaries and more investors.
Right. Radhika, one more question to you before I introduce our next guest. Overall, where do you think the direction is for the markets after this budget for the rest of the year?
So I don't think the budget shapes market direction, for the year. I think it has a short-term impact, but we've got past the point where the budget is a dramatic event. There's always some risk around rumors, etc., LTCG, etc. But once that's out of the way, I think finally markets react to where earnings growth are. Now, as a house, our belief is that the short term will remain volatile. Last year was volatile, as Karunya said, and I think this year will continue to be volatile, not just because of where valuations are, but we are in a globally tricky territory. So I don't want to rule that out. But over the next 3 years, and I think DP also pointed this out, can the Indian economy sort of come back? Are we a part of a large earnings revival? Is domestic manufacturing picking up? Absolutely, all those things are happening. So over a 3-year, horizon, we are constructive on domestic equities. We do believe domestic equity investors will make money, but it's very hard to talk about 1 year. And I still think the next year will continue to be a volatile one because you have recessionary conditions abroad. You have inflation that is a major problem in developed markets. So our theme for the year continues to be recession before returns.
Okay, right. At this point, let me introduce you to two of our guests. Manoj, hi. Manoj Nagpal is the Chief of Outlook Asia Capital, and Vishal Dhawan, our financial planner, and he's the head of Plan Ahead Financial Planners. So, Manoj, let me start by asking you, just give us an overall view of the budget. Too many changes, positive changes, of course, in the personal tax regime. But do you think more could have been done, or do you think at this point in time it meets your expectations?
Yeah, so there are two aspects that investors should look at. One is, as you rightly said, the personal tax regime. There is clearly a shift, and a favor shown towards the new tax regime, and there is a push by making the new tax regime a little more favorable for people who are earning in the lower tax brackets. And secondly, it has also made it more favorable for people in the extremely high tax brackets, that is 5 crores and above, by reducing the cess from 37% to 25%. So that's a big change. So clearly there is a direction that the new tax regime, both on the higher end and the lower end, is more positive or more beneficial for savers today. The middle of the pack still, that is, if you were to take anywhere from the income tax or the income range from say 10 to 15 lakhs to 2 crores kind of thing, there is actually no significant change for those people to shift. So the higher end will shift, the lower end will shift, but the bulk in between will still remain the same. And that is primarily because the deductions in that old tax regime still make sense for that category of people who are in that income bracket. The other side, what it has done for investors, if you were to look at the savings and investments, what the government has done in that it has pulled down a lot of loopholes that were existing into the same. So whether it was insurance, whether it was market-linked debentures, and they have tried to curb down those loopholes and make investing the same across the plane. So now investment decisions will be based not on the tax arbitrage that is available, but on the efficiency of the instrument. I think that's a very positive thing that this budget has done for investors.
And that's also consistently that I think the finance minister has been doing, right? I mean, the EPF voluntary contribution was taxed beyond a certain point in time.
Yes.
Even your ULIPs were also taxed. Now, this time, today she's talked about, insurance policies, but non-death benefits.
Yes.
And, non-ULIPs. So even where the premium exceeds a certain amount, then, your redemption proceeds will be taxed.
Yeah, so that was a loophole, and that was being used by some of the insurance companies by selling policies, and predominantly it was in the endowment policy space. Wherein in the future income that was getting generated from insurance policies was peddled as tax-free income, especially in the higher end of the bracket. So I think that was a misuse of the insurance product to certain category of investors. And I think that has been rightly been plugged.
Vishal, do you concur with Manoj's view on the announcement made for insurance premium to be taxed if it's over 5 lakh?
Well, certainly, I think, there are two provisions effectively that have come through. One is that the death proceeds will continue to be tax-free. And the second part is, if you're putting large premiums in, then whatever is the excess of income generated over 5 lakhs will start getting taxed. Now, what we have to do is, very clearly, if you look at insurance as a vehicle, its primary role is to actually cover death. And what ends up happening is you had tax benefits that were suddenly making insurance plans an investment vehicle as well. And I think any step which helps people simplify their investment strategy, separate out insurance and investments, ensures that tax arbitrage doesn't become the reason why you club your investment and insurance together, I think is a very, very welcome sort of move.
Vishal, two more investments options have come into spotlight thanks to today's budget. One is the senior citizen savings scheme, where the limit was stuck at 15 lakh for a long, long time, and, the monthly income scheme also. Now, these are very popular instruments, especially with senior citizens. So how big is this move and what's your reading on it?
So I think the senior citizen savings scheme doubling of limit, effectively making it 60 lakhs, is a very large and positive move, because very clearly it is one of those instruments that do offer you much better than market returns. And for senior citizens, there are very few vehicles where you could have actually bought into longer term instruments and get a guaranteed sort of income coming to you every quarter. So very, very clearly, that's a positive move, I think, for senior citizens who were using up the 30 lakh rupee limit earlier between themselves and their spouse. I think it's great that they can now look at a larger number.
And the rates have also gone up recently.
Yes, and the rates at 8% are very attractive relative to all other sort of tools that are available. Of course, the income from there is taxable. So, what will end up happening is that it may not still compete against tools like the PPF, for example, which is 7.1% tax-free. But there you can only put away $1.5 lakh per person. So very clearly, the senior citizen savings scheme is doubling of limit is excellent news. I think as far as the post office monthly income scheme is, relatively, I think that's maybe not as attractive, because what happens is interest rates there are at about 7.1%. And what ends up happening is if you look at a lot of fixed deposit rates today offered by banks also, which, for say 5-year deposits, which is the tenure of the MIS as well, you will find that they're going up to about 7.5%. So I think the use of the MIS, one has to be a little more careful as compared to the senior citizen, because the rates are not as attractive as what you get on the senior citizen. Additionally, I think for a lot of people, especially as they get older, operational ease is a very, very important part of what they need to think about. And maybe they could find that the monthly income scheme is not as simple to administer and operate as compared to, say, a bank deposit for them. So I would say SCSS, big plus, MIS, think about it carefully before you do something.
Vishal, I want to ask you a very basic but important question, something that, we've repeatedly seen all day on our feed, on our social media. Which tax regime to choose now? And, it's something that we've, a lot of newsroom chatter has also gone around all day today. I don't know if people have already started reaching out to you and, started asking you that. But after the revisions and the changes that have been announced by the finance minister, which regime do you think is actually more prudent for the Aam Aadmi?
So unfortunately, there is no one answer on this. That's very, very clear that, while the default system is changing to the new tax regime, one could still find that depending on the income that you have, as well as the deductions that you're already taking advantage of, whether it is under Section 80C or 80D or, the NPS sections, HRA concessions, etc., you might still find that the older tax regime might work for a lot of people. So what will end up happening is one of the clear things that will need to happen is, unlike earlier, where for most people you found that the new tax regime did not work. This time there will need to be a lot more detailed analysis and a lot more projections, because a lot of this is about making decisions about what you expect your income to be next year when you're trying to make some of these decisions. It's not a past decision, it's a forward-looking decision. And therefore, I think that for people who are above 5 crores, I think that decision is much easier to take because of the way that the surcharges have got reduced. I think for a lot of lower income people as well, I think it's an easier decision to opt for the new tax regime. But I think for a very, very large number of other people, one will actually have to crunch the numbers and then figure out what actually works well and what doesn't work well for a specific person.
Manoj, this, what so many changes have happened in the new tax regime, and the thrust to go to the new tax regime now certainly on the finance minister's mind. Most of the times there is a rush of people during December, January, February to do a lot of tax saving investments just for the heck of it. Now going forward, especially for somebody who's joining the workforce, this year, who's joined workforce, let's say 2 or 3 or 4 years before, obviously their income would be at a certain level, not at a very high level. What is your suggestion as to how should they start their financial planning, and should they necessarily keep any tax saving investments in mind, or should they just now completely ignore that?
Yeah, so the way I look at it is that, if a person saves something, so, very simplistically at this point of time, the thumb rule is that if you are planning to save anything, during the year, the old tax regime will work for you better. And if you are a person who's maybe in a lower income tax bracket, or who cannot save because of other commitments that are there in the family or your other, and the amount of money that you have left over as disposable income to invest is not there, then the new tax regime is better. Okay, so what this tax, earlier the gap between the new tax regime and old tax regime, as Vishal rightly pointed out, was clearly tilted in favor of the old tax regime. So it was a no-brainer that 99% of the people would find the old tax regime better. So what the finance minister in this tax budget has done is slightly moved the needle and made the new tax regime more closer to the old tax regime. But at this point of time, still, if you are a saver, and for example, if let's look at the total exemptions. So what the finance minister has done is that brought the standard deduction also in the new tax regime. So that's an addition she has done. But all other deductions, which are in the range of around 5 to 6 lakhs, which you can claim in the old tax regime, that is still available in the old tax regime. Even if a person cannot utilize the entire, 5 to 6 lakhs, it will still be around 2.5 lakhs. And at that point of time, if you to say a person is going to utilize the ATC limit of 1.5 lakhs, maybe invest a little, take a medical insurance, which I think even if there is no tax benefit, one has to still take a medical insurance. And
your EPFO is also by default in many cases as salaried employment.
As salaried,
you actually use your EPFO or not, you already, it's a saving benefit for you.
It's a benefit, yes. So it makes, so if you're going to a little bit save, a little bit also, around 1 lakh or so, even then the old tax regime stays better at this point of time, especially if you are in the tax bracket of 10 lakhs plus. And given that fact, I think most of the people in that income slab will continue with the old tax regime. The counterpoint to that is that most of the, in India, most of the taxpayers are in the income, that is the number of taxpayers are in the tax bracket of 5 lakh to 10 lakh of, annual income. And for them, it may be quite, wise to shift over and not save tax. But again, as a, that's not a very prudent advice to give to not save, and hence.
Well, also Section 80C and, there is so much of tax reductions also came by people who, take a housing loan. So that's an expense. That's not really an investment. I mean, you invest in a capital asset, and for that, you need to take a loan. Now, whether that gives you a tax reduction or not, it doesn't really make that huge a difference, right? I mean, if you have to buy a home, you buy a home.
Home, yes. So I completely agree. So, those are the things, so it's 1.5 lakhs of ATC benefit, 50,000 of the NPS benefit, 2 lakhs of housing interest loan, 25,000 of medical insurance for self, 50,000 rupees for your medical insurance for your parents, and HRA, that if you're staying on rent, HRA benefits. So all put together, that's a basket of around, as I said, 5 to 7 lakhs. Some people, obviously, if you're using the HRA, you won't use the housing loan component, but both are replaceable in the same, almost the same bracket. So effectively, it's still 5 lakhs of exemptions which one has to leave on the table. If you were to calculate backwards taxes on that, if you're 30% bracket, if you were to leave out the 5 lakhs, then it's around 1.5 lakh of tax foregone there. So it has to compensate there. So that's why I said it's better to stick in the tax old tax regime. If you intend to save and you're in the bracket of 10 lakhs plus kind of income, most probably the old tax regime still will make sense for you.
But more and more over the years, I think more and more focus would now shift to financial planning rather than tax planning being the overall main
motive.
goal.
Yeah.
Motive, yeah.
I also want to get in your perspective on the threshold changes that have been made for presumptive taxes for eligible businesses, for even specified professions. What do you make of the revisions, firstly, that have been announced, and what are the points or what are the factors that one should consider before opting for this PTS scheme?
Yeah, so the presumptive taxation scheme essentially allows a 15% set off of expenditure for your total professional income. Predominantly, it's in two parts. One is the manufacturer trading income or the professionals. We are more focused on the professionals, whether it's doctors, lawyers, in that category, and there are specified professions in that. It's not that all professionals can take it. So there is a set of certain specified professions which are allowed to take presumptive taxation. Earlier the limit was 50 lakhs, and honestly, for example, if you look at the the law firms usually, hence most of the people, if you see in a law firm, are on contract. Because of this reason, they are not full-time employees. Because as soon as you become a full-time employee, it becomes salary, and you cannot take presumptive taxation. So most of the law firm takes graduates as on contract, which allows them to take this. So even if you have to take today a law graduate from the top tier law school in India, their starting salary is in the range of 15 to 20 lakhs, and within a couple of years, law is obviously a higher paying profession. So it's not a normal salary, but typically in 2 to 3 years they move to the range of 40 to 50 lakhs salaries, and that was causing a little bit of concern, because anybody who's got more than 3-4 years of experience could not avail of this tax regime that moving there, and hence they have increased the tax regime, and I think rightly so. The whole purpose of and this specific government is focusing on making filing taxation simpler. So rather than telling people to create more paperwork, it's better that they increase the slabs. And I would also exhort the government that more professions should be included in this kind of rather than the current set of limited professions which are there. So since Mr. D.P. Singh is also here, the mutual fund industry should advocate that even mutual fund distributors come into that professional presumptive taxation.
No, for sure. But one point which I think all of us are missing out, the specific thing which Finance Minister said, that not more than 5% should come in the form of cash. In all these presumptive limits, when they have increased it, they have said no. And today, whatever the presumptive income, if you look at the income tax returns, most of the inflows are into the cash. So that what I earlier said, the attempt is to get more and more into the formal this thing. Now the digital UPI is there. Everybody has the digital apps. So why somebody going to doctor, why should he pay in cash the fee? They want everything should come through digital mode, so that more and more money come into formal, so that the size of economy increases, and the tax governance also comes into form. So that's the attempt. Attempt is not only to give the benefit, but rather to incentivize them to get into the formal economy.
Right.
Clearly, all the steps seem to be pointing to the right direction.
Yeah, and I don't know what about you, but maybe I'm thinking of becoming a lawyer now.
Yeah, I mean, thanks for rubbing it in. Yeah, well, but I guess we'll have to see how things pan out over the next few years, whether or not Mr. Singh's predictions will come true. He says in the next 3 years, perhaps the old regime could be phased out.
Yeah.
So let's wait and watch.
Let's wait and watch. So thank you so much, Manoj. Thank you so much, Mr. Singh. Vishal, Radhika, thank you all so much for joining. And for our viewers, thank you so much for joining, and please log on to moneycontrol.com for more. We're still dissecting the fine print of the budget, and over the next 2 or 3 days, you will expect, we will give you more and more analysis on how the budget has panned out. Thank you so much.